Hey guys, today we're going to review the short trade from last week that hit its target on the CAD yen, and moreover what I'm looking for in terms of long aggressive entries for the dollar CAD, and finally a new daily bias that formed on the euro dollar. Okay, let's start with the CAD yen. Okay, this is a daily chart. Let's review the short trade from last week. So the last daily long trade that form was right here, and the last daily short trade that form was right here. And although the initial analysis was stating that this bias was long, right at this point right here, there was lower confirmation stating that this bias is in fact short. Or in other words, price is likely to reach this pivot low before reaching this pivot high. And so in my midweek analysis, I was mentioning I'll be willing to take an aggressive short entry. And that entry confirmation formed roughly at these levels. And so I took a short entry with the stop loss roughly at these levels and its main target right here. Okay, and then 3 days later, that main target was hit. Alright, but for educational purposes, let's go ahead and review this setup in more detail. Let's go over to the 5-minute chart. Okay, so on this 5-minute chart, after the aggressive short entry was confirmed with this breakout and immediate break back in, however, price getting down to that pivot low, I took a short entry roughly at these levels with a stop loss at this pivot high right here. And its main target at the daily bias is long trade roughly at these levels right here. Now you want to remember an aggressive entry gives you the ability to have a very tight stop loss. Now in this case, it was a 30 pip stop loss. However, on the other hand, until the main target is hit, you have to watch current price to see if there's any long strength forming. Okay, so after I entered this short entry right at these levels right here, and price came all the way down to these levels, there was no current long strength forming. And moreover, even as price pulled back at these levels, even though price was going up, the lower confirmations was not showing any current long strength. So I did not abort that short entry. So you want to remember that even though price is going up or down, if the lower time frames price action does not confirm that move, it doesn't mean that move in that direction is going to continue. Okay, and as price pulled down to these levels and pulled back right here, there was still no long strength confirmed. And then last week on Monday morning, price made a nice gap right here and hit its main target right here. Okay, and so at this point, I took out the entire position. Now, the reason why I took out the entire position and not leave some in for extensions is because the price of interest for this pair is very high when you're taking a short entry. Okay, so when a new daily or weekly bias forms on this pair, I'll keep you guys updated, guys. All right, so let's go on to the dollar CAD. Okay, and if you're having trouble understanding what I'm talking about in terms of lower confirmations and biases, please check out my analysis manual, which is an instruction book so you could better understand these forecasts. Okay, this is a weekly chart. Let me run you by the current setup I was looking at. So the last weekly short trade, that form was right here, and the last weekly long trade, that form was right here. And then last week at this point right here, there was lower confirmation stating that this bias is long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. And so in earlier forecasts, I was mentioning I was looking for an aggressive entry setup for this long bias. And at the current moment, that aggressive entry has not formed yet. So let me show you what I'll be looking for next week. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart next week, if price could come up to this trend line, break it out, and immediately break back in. However, price could still reach that pivot high to create strong long strength. I'll be willing to take an aggressive long entry right at this point right here with a stop loss at the pivot low where that strong long strength form, which will be right at this pivot low right here. And the main target way above on that weekly bias is short trades pivot high. Okay, and moreover in this case also, if this aggressive long entry forms, because it's an aggressive entry, I'm going to have to watch price action all the way until price reaches that main target way above. Okay, so we'll just see what happens with this one. I'll keep you guys updated, guys. All right, so let's go on to the euro dollar. Okay, this is a daily chart. Let me run you by the current setup I was looking at. So the last daily short trade, that form was right here. And the last daily long trade, that form was right here 2 days ago. So let's go ahead and do our initial analysis to see how much short strength there is and long strength there is. Let's go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed roughly in these areas right here. Now in terms of short strength, first of all, there's a weekly trend line that runs right through this level. That's providing short strength, and more of this mini gap right here that's also providing short strength. Now that said, that short trade is running right into this small gap right here, so we have to subtract some long strength from this short strength right here. Okay, and moreover, that daily long trade formed in this area right here. And this one also has a nice weekly trend line that's providing long strength that runs right through that level. And moreover, we have this small gap right here also providing long strength. Okay, so let's finish up this analysis. Let's go back to the daily chart. Okay, so back on this daily chart, in terms of the candle strength for this short trade, there is a nice full candle right here, adding a good amount of short strength. Now, on the other hand, the long trader right here, all we have is this harami right here. So in terms of the candle strength, there's more short strength than long strength. Now, that's just in terms of candles. But putting those monthly elements into the calculation, I would say there's more long strength than short strength. So the initial analysis is stating that this bias is long, or in other words, price is likely to reach this pivot high before reaching this pivot low. Okay, but like always, in order to take an entry, I'm going to need lower confirmations for this setup. So let me show you what I'll be looking for. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, the only lower confirmation that's forming at this point is if that daily bias is short. And so if price could pull down to this trend line, break it out, and immediately break back in, however, price gets back down to that pivot low to create strong short strength, that will confirm that daily bias to be short. Okay, again, you want to remember, although the initial analysis is stating that that bias is long, if the lower confirmations confirm it to be short, the lower confirmations always have the ultimate say, and I'll be willing to take a short entry. Okay, now moreover, in this case, I'll be willing to take an aggressive short entry. And so in this hypothetical case, if strong short strength forms right at this level right here, I'll be willing to take a short entry with a stop loss at this pivot high right here, and its main target right at this pivot low right here. Okay, so we'll just see what happens with this setup also, and I'll keep you guys updated, guys. Okay, so today let me explain a little bit about aggressive entries. Okay, so at the basic level, there's two major characteristics. Now, number one is that it gives us much better risk and reward quality. So the aggressive short trade I took on the CAD yen last week, it had a stop loss of about 30 and a target of about 300. Okay, so that's a 1 to 10 risk to reward ratio. Now, opposed to that, a regular bias's risk reward ratio is often about 1 to 4. Okay, so aggressive entry, when compared to normal bias entries, gives us a much higher quality risk reward ratio. Okay, and the second major characteristic of aggressive entries is that upon taking that entry, you have to watch the lower time frame's price action for any opposing strength until the main target is hit. Okay, because taking an aggressive entry always leaves the possibility that lower confirmation in the opposing direction may form, in which case you have to abort that trade immediately. Okay, so in this way, although aggressive entries seem like a great entry style, there are risks associated with that type of entry style. Okay, so more or less, the decision whether to take a normal bias entry or an aggressive entry really depends on market conditions and moreover current personal situations that you're currently in. So in other words, in one directional markets where the markets aren't really giving any pullbacks, it could be a good idea to take an aggressive entry. And moreover, in terms of personal life situations, if you have the ability to watch price for an extended period of time, then taking those type of entries may be a good idea. Okay, but moreover, it's generally important to have many type of entry styles that would allow you to flow with market conditions. Okay, because it's important to adjust your trading style to how the market is moving at the current moment and not force your intentions onto it. Okay, but it's even more important to be able to flow with your personal life situations. So if you currently have a busy lifestyle, you should stay away from aggressive entries and more or less trade with normal bias entries. Okay, so just remember, you never want to force market conditions, but more importantly, you never want to force your life situation if you want to trade the markets efficiently in the long term. Okay, so that's it for this weekly analysis. I hope you guys have a great week, guys. Thanks for watching. Goodbye.